Good morning, everyone. Welcome to this operational and financial investor update call to discuss recent M&A activity and Q3 financial results for MPX Bioceutical Corporation, henceforth referred to as MPX. At this time, all participants are in a listen-only mode. Following the presentation, we will conduct a question-and-answer session. Instructions will be provided at that time for you to queue up for questions. Before beginning its prepared remarks, MPX would like to remind listeners that today's discussion may contain forward-looking statements that reflect current views with respect to future events. Any such statements are subject to risks and uncertainties that could cause actual results to differ materially from those projected in these forward-looking statements. For more information on the company's risks and uncertainties related to these forward-looking statements, please refer to the forward-looking statements section of the company's press release dated March 5th. For additional information about factors that may cause actual results to differ materially from expectations and about material factors and assumptions applied when making forward-looking statements, please consult the company's MD&A and other regulatory filings, which are available at www.sedar.com. MPX does not undertake to update any forward-looking statements. Such statements only speak as of the date made. Please note that today's discussion also refers to certain non-IFRS measures, such as EBITDA. If anyone has difficulties hearing the conference, please press star followed by 0 for operator assistance at any time. I'd like to remind everyone that today's conference call is being recorded Thursday, March 28, 2018 at 10 o'clock a.m. Eastern Time. I'd now like to turn the conference over to Mr. Scott Boys, Chief Executive Officer. Please go ahead.
Good morning, everyone, and welcome to our investor conference call to discuss our recent M&A activity, including a brief overview of our Q3 financial results. I'd like to start today with some commentary on our recent acquisition in Arizona, and then I'll turn the call over to our CFO, David McLaren, to go over our Q3 financials. David joined us a little over a month ago and has jumped with both feet into the wonderful world of cannabis in North America. I think he's having fun, although we certainly keep him busy. I'll return with some brief closing comments before opening up the lines for questions. Also with us today is Beth Stavola, our Chief Operating Officer, who will be available for the Q&A session and probably more competent than anyone in our organization to answer your questions. As you know, we've been very active over the past several months as we continue to execute on our strategy of becoming one of the leading commercial producers of medical marijuana in North America. While we have plans to expand into Canada and the wheels are in motion for operation of a cultivation and processing facility here in Ontario, we are currently focused on building out our U.S. presence. Since January of last year, our executive team has successfully completed a total of 9 U.S. acquisitions. In December of last year and January of this, we announced our acquisition in Nevada and 4 in Maryland. And last week, we added to our presence in Arizona with the acquisition of a group of entities that are expected to immediately be accretive to our earnings. This group is very well managed and will more than double our cultivation capacity in Arizona. Bill Abbott, one of the founders of that group, will join our Arizona management team, and Dan Hayden will stay on as that group's general manager of operations. Both men are extremely capable and have built a very successful business in the northern part of Phoenix. As we've said before, Arizona represents one of the best regulated, industry-supported medical marijuana markets in the United States. It's also one of the fastest-growing population areas in the country, which means a continuous influx of potential new patients. Our foundation is built on our profitable operations in Arizona, and this acquisition will add to that profit engine. We filed our Q3 2018 financials last week, and I feel it would be useful to spend a little time on that. So I'll turn the call over to David McLaren for a few minutes to break down the numbers for you. David?
Thank you, Scott, and thanks for the introduction the last couple months here. Most comparisons we'll talk about, unless noted otherwise, will be to our previous quarter in Q2. On the revenue side, we had a solid third quarter. We saw revenue growth versus Q2 of 2% to $4.5 million, driven by a higher price per gram, which was driven by our mix of products in the quarter. During the quarter, our Health for Our Life dispensaries in Arizona sold 266,182 grams of cannabis products as compared to 271,405 for the previous quarter. The average selling price per gram at the Health for Our Life dispensaries increased 1% from 14.94 in Q2 to 15.02 in Q3, and again, driven by the product mix. Gross profit for the period before adjusted for the unrealized gain in the fair value of biological assets was $1.6 million, which represents a gross margin of 34.7%. This compares to $1.9 million, or 42.6% in Q2. The gross profit after adjusted for unrealized gain in the fair value of biological assets was $2.6 million, reflecting a 57% gross margin, and this compares to $2.9 million, or 65.3% gross margin in Q2. On the expense side, expenses for the quarter came in at $5.3 million as compared to $3.9 million for the quarter ended December 30th, 2017. The increase in operating expenses was attributable primarily to an increase in general and administrative expenses from $3 million to $2.4 million in Q2. This was primarily driven by the acquisition of Nevada in early December and additional support staffing and consulting services, legal and finance to support our growth. Additionally, share-based compensation was higher at $859,000 versus $181,000 in Q2 2018, driven by the change in composition of and compensation to our board of directors as approved by the shareholders at the annual and special meeting held on October 30th, 2017. The company recorded a net operational loss of $13 million as compared to an operational loss of $1.5 million for the 3-month period ended December 30th, 2017. In Q3, $10 million of non-cash items were recorded, including a loss of $9.2 million related to the October 24th, 2017 drawdown of our $10 million from a revolving credit line as the option component increased from date of drawdown to December 31st, 2017 as the share price increased in value. We also had a share-based compensation increase of $859,000 from $181,000 in Q2, driven by the change in our board of directors approved at the annual meeting. The corporation also incurred $429,000 versus $209,000 in Q2 of transaction costs related to the acquisition activity we had in Q3. We anticipate as we grow and our assets under development become operational, margins will improve faster than operational expenses. In other words, we are investing for growth. Adjusted EBITDA, additional costs incurred in Q3, driven by non-recurring legal and accounting costs, which expected to be reduced going forward, and the addition of Nevada operations resulted in adjusted EBITDA of negative $1.2 million, as compared to a negative $300,000 for the 3 months ended September 30th, 2017. On October 24th, 2017, the corporation made an initial drawdown of $10 million under our $25 million U.S. revolving credit facility. The funds drawn down against the facility were earmarked specifically for making further acquisitions, capacity expansion, and the development of new facilities in Massachusetts and Maryland. On December 22nd, 2017, we closed our private placement for a total gross proceeds of $26.5 million. As of December 31st, 2017, we held cash and cash equivalents of $32.3 million, while current liabilities stood at $15.4 million as of the same date. In other words, we are well capitalized. While we utilized $3.4 million in cash for operations, our results are improving, and with additional assets coming online, we are moving towards cash positive going forward. As a side note, our Arizona assets themselves, without a general MPX-related corporate overhead, are solidly cash flow positive. During the quarter, we also used $17.2 million in cash for investing activities related mainly to the acquisition-related cash expenses. Net cash provided by financing activities was $32.6 million. I will now turn it back to Scott to discuss further developments. Thank you.
Thanks, David. Obviously, the focus these past several months has been squarely on growing the MPX footprint in the United States. In that respect, I think we've made some really great progress. We now have 10 dispensaries in 4 states, either operational or in various stages of construction, 3 cultivation facilities operating at full capacity, and a 4th under construction in Massachusetts. These represent almost 100,000 square feet of cultivation coming on stream. We also have 3 of the most advanced processing facilities fully complete, with a 4th, again under development in Fall River, Massachusetts. Together, they'll produce in our next fiscal year, beginning April 1st, 9 to 10 million grams of dried flower and over 2 million grams of concentrate production capacity. This is one of the larger footprints in the U.S. cannabis industry, and one we intend to expand even further, both by expanding in states where we already operate and by entering into new markets. Going forward, our focus naturally will be on developing the assets and expanding our footprint, but we're also executing initiatives to drive organic growth of our assets that can be broadly categorized into 3 focus areas: increasing yield in our current operations, leveraging our brand strength, and some product differentiation. The MPX brand is very strong and continues to grow. The main limiting factor in the past has been availability of product, the availability of product that could be produced by our processing facilities, particularly in Arizona. We're now in the final stages of opening a much larger processing facility in Mesa, Arizona, that will more than double our capacity to produce MPX concentrates, and these concentrates are already sold by dozens of Arizona dispensaries. In Nevada, our production capacity has been limited by the availability of raw material, of biomass, and most of our product produced there has been sold 2 to 3 weeks in advance. In summary, our Arizona assets recorded a solid performance for the third quarter of fiscal 2018, and these trailing results, combined with our recent acquisitions and our capacity expansion projects, form a strong foundation for the business to grow during the next fiscal year. We're building one of the larger cannabis companies in the United States market and have a number of initiatives on the go to increase production capacity and to further differentiate our product offering and increase our market reach. These initiatives, we believe, will drive strong growth and margin improvement, enabling us to pursue even further expansion opportunities. Our ability to execute has been proven, and with the facilities in place and under development and our demonstrated ability to access capital, we're very well positioned to continue to execute on our growth strategy. The U.S. cannabis market continues to progress rapidly, and in a market that is characterized by a high degree of fragmentation with many smaller, undercapitalized operators, we have a unique opportunity to establish ourselves as one of the leading companies in this sector. We are already among the largest cannabis companies in terms of revenues, and with pricing in the U.S. states that we operate in remaining strong, we believe we are poised to capitalize on these opportunities. That concludes my prepared remarks. I'd now like to open the floor for questions.
At this time, if you would like to ask a question, just press star and then the number 1 on your telephone keypad. And if you do want to withdraw your question, simply press the pound key. And we'll pause for just a moment to compile the Q&A roster. Your first question comes from Russell Stanley of Echelon WP. Russell, your line's open.
Oh, good morning, everybody.
Hi, Russ. You're always the first. Love it.
I try. I guess a question to start. You talk about potentially expanding into other states, and to the extent you can you elaborate on which markets you like the most at this point?
I'm going to let Beth answer that because she's the most active in the application process.
Sure, Scott. I'm happy to do that. Hi, Russ. How are you?
I'm well, Beth. How are you?
Good. First off, we have 5 applications in Ohio right now. So I'm anxiously awaiting. I did speak with someone last night, and it looks like the dispensaries and processing awards will be coming out in the next couple of weeks, so look out for those to come out. I'm most excited right now about the New Jersey program. If anybody knows about the New Jersey program, it's been an abysmal program under Governor Chris Christie. We do have a new governor here now, Phil Murphy, and he's changing the medical program, for which I'm very involved in that, and then looking to switch that into an adult use program. So New Jersey is definitely high on our radar.
Excellent. Thanks for that color. That's really helpful. Wondering as well if there are states you can comment on that at this point you intend to steer clear of at this point.
I don't think that there are really any that we're steering clear of. I mean, I would say that we're going to continue with our strategy of sticking to limited licensing states. One of the states that I really like is California now. I've gotten very comfortable with the rules and regulations there, and we're looking to potentially do a deal where we take the MPX concentrate brand there under a licensing agreement.
Excellent. Okay, that's great color. And just if I could, a bit of an update on Massachusetts. I think you've got 2 of 3 dispensary locations nailed down in terms of obtaining local approval. And assuming I'm right there, do you think you're close on number 3?
I think that we're pretty close on number 3. It is a great location, and I'm going to refrain from mentioning the town, but it's
Sure.
a great population. The other 2 that we definitely have nailed down, which I think you know already, are Fall River and Attleboro. Both are under construction, and I actually just saw some photos of each of them yesterday. So they're right on schedule, as is the cultivation and processing facility.
Great. And just a final question, if I may. I know some people have probably already asked of it, but we're now just over, I guess, 2 months following the issuance of the Sessions memo, and just wondering if you can comment as to any change in business or any new hiccups that you've experienced since then, if there have been any.
Nothing thus far, and you know, our stance pretty much is that it was really just a memo. You know, it wasn't you know, a law. Scott, do you have anything additional to add to that?
No, I think in summary, it was like a minor speed bump that the industry raced over pretty fast. We haven't seen any significant change. There's been new states that have come on stream legalizing cannabis since Sessions' announcement. We continue to grow. I think Tick Segerblum, one of our board members, put it most aptly, is that no attorney general in Washington is going to be able to put the cannabis genie back in the bottle. The industry is just too large now. I mean, with something like $400 million in taxes being created, and an employment base that's now larger than the employment by all 3 automotive companies, and then the downstream wealth being created through construction and employment, it's just too large now for the industry to be set back. And I think we're going to see some legislative, particularly potentially with the new budget appropriation in the U.S., that may give us a little bit more clearer picture of the government's approach to it in the future. But in short, we haven't seen any real problems since the Sessions announcement.
Excellent. That's excellent. Thank you very much for the color.
Okay. Thanks, Russ.
And your next question comes from Matt Bottomley from Canaccord Genuity. Matt, your line's open.
Good morning, Scott, David, and Beth.
Hi, Matt.
Good morning.
So maybe just to start on the Holistic Centers acquisition, just wondering, you know, how you see that integrating into your existing business and where that dispensary ranks, you know, related to some of the larger dispensaries in the States. My guess is that a $15 million top-line run rate is fairly large, particularly for the state of Arizona. So maybe where you think that dispensary ranks amongst the existing dispensaries in the States, and if you think you'll be able to get some margin expansion from where it currently sits today.
Okay, I can't tell you exactly where it would relate. It's certainly one of the larger producing ones. Most of them are private, so they don't report their numbers, so I'd be speculating. The dispensary is located in a great area of town. It's in an area that does not yet have a lot of local competition. It's in a strip mall with lots of parking and a great patient activity. I've gone into the reception area there and found places where they couldn't even find a place to sit. So they have great traffic. Part of the reason they can do such great volume is they have a line of concentrate called Timeless, which has been very successful in the state. I think they probably have higher revenue than our own MPX brand, although I think they're addressing a different segment of the market. In terms of economies, I think with our other 3 dispensaries and our other grow operations in the Phoenix area, we're going to be able to find some economies in terms of purchasing. I think Beth's already working on that to some extent, particularly in terms of cartridge purchasing and some of the components that go into the grow operation. We'll certainly find some economies in back shop and administration, legal, consulting, accounting, finance, some of those areas. So we'll get some margin improvement out of that operation, and we'll get obviously some ancillary margin improvement out of our existing operations. The bigger the scale, the more attractive we can get to pricing and purchasing and so forth. So.
Great. So maybe just on a housekeeping item then. So your Q3 results, keeping FX constant, you had a $4.5 million Q3. Is that only the 2 dispensaries right now in Arizona? So we're going to add a 3rd dispensary in Arizona on top of that, as well as this as well as the Holistic Centers acquisition pro forma?
That's correct. So in Q3 we had only 2 dispensaries operating. The 3rd dispensary is virtually complete, and it'll be opening later this month or mid next month. I think we're just waiting for inspection by the city, and then we can open the doors. And then, of course, the THC acquisition, the new acquisition, comes in on top of that. So we'll get 1 month revenue out of the new acquisition in our Q4 numbers, and then we'll have all 4 dispensaries operating for Q1 of next year. And we've also got the Nevada operation that came on stream last quarter. And the month of March, I think, is going to be a big month for us in terms of revenue from Nevada as well. Beth, can you want to add anything to that?
Yeah, I think that the month of March, we're on track to do about $1 million in top-line sales. And then the 3rd Health for Life dispensary the state will be coming out to do an approval to operate on March 16th. So I expect to have that operational by the end of the month, absolute latest April 1st.
Perfect. So the $6 million in Q4 that you guys guided in your Q3 release, that's pretty much includes everything we discussed, with the exception of the 1 month that's going to be included for Holistic Centers potentially.
Yeah, that's correct.
Okay. Maybe just last question on my end. Is there any other color you can give on how Panaxia is progressing and when that rollout is expected? The number of dispensaries you think it'll roll out into initially in Arizona, and then maybe other states after that?
It's been a little slow to get off the mark. We're dealing with some issues in terms of compliance, making sure that we can operate in full compliance with the state. So we'll have more color on that by the end of next quarter.
Okay, thanks, guys.
Okay.
And your next question comes from Vahan Ajamian from Beacon SEC. Vahan, your line's open.
Hi. Thank you, guys.
Hi, Vahan.
How's it going?
Good.
So just a couple questions. So with the new acquisition you just announced, what's your current market share in Arizona?
That's a tough question, Beth. The state publishes volume numbers, but they don't necessarily publish revenue numbers. So once again, most of the industry participants in the state are private and don't publish their results. Can you take a wild guess, Beth?
Oh, it's hard to say. I would probably say maybe 7 or 8%.
Yep, I would have been in the same range.
Yeah.
Okay.
I think we have the potential to do about $40 million in revenue in Arizona in our next fiscal year. So, and the total, so probably 7 or 8%.
And the one thing that I think I'm really excited about for this upcoming quarter is when we finally are permitted to move our laboratory over to the new location. We're literally just waiting for a C of O from the city of Mesa. That is going to actually triple, almost quadruple our capacity for MPX, and we actually have some dispensaries that want to buy the MPX products that we just don't have the capacity right now in our current location to sell to them. So from a wholesaling perspective, I'm excited to see what we can do on that side.
And I mean, you obviously mentioned some of the states you're looking at getting into, such as Ohio. What's the management bandwidth or focus? Is it, how much of your time is going to be spent on, getting deeper penetration in the 4 states you are in versus going after new ones to expand into?
Well, the market is moving so quickly that it seems like every time we turn around, there's a new state that's announcing that they're pursuing an adult use program, or a new state that's planning on pursuing a medical program. And it's a real combination of balancing our management's time between current operations and making sure that we're not missing the opportunity to write applications for these upcoming states, because these licenses are, obviously, we all know on the call, worth a lot of money. So the most amount of them that we can win, it's the best for the company.
Vaughn, just to expand on that a little bit, I mean, in terms of expanding cultivation, you'll note we did the arrangement with M. Jardine to try and make sure that as we expanded our cultivation capacity, we had the bandwidth there in terms of grow operations, and they've been very helpful with us in Nevada, and they will continue to be helpful with us as we grow into Massachusetts. And the other thing you'll note that we have a pretty high employment expense if you look at our quarter-over-quarter employment costs. And part of that is investing in training talent that we will be able to move around as we expand into some of these locations. Even as we've moved into Nevada and to other places, we've been able to have available people trained in the Arizona operations to move into new markets. Beth has geared up some staffing already for Maryland, and we're working on staffing for Massachusetts. So part of it is investment and training. We're always going to have a high employment expense as we continue to expand, because we want to have those people available to go in and manage operations as they come on stream.
Okay. And on the congressional front, you mentioned the possibility that we could see some budgetary amendments or additions to the bill. And any thoughts on that when we may see something?
Well, I think the appropriations have to be completed before the interim budget expires in May. So I know there's a lot of strength, and Beth can support this. There's a tremendous amount of congressional support for the industry. And the Roebucker-Blumauer amendment continues in place. And the rumor has it, and it's only rumor because we can't speculate on what's going on behind the scenes in Congress, is that they're going to try and make the appropriations amendment a more permanent fixture and give the industry a little more stability in terms of outlook from a regulatory perspective. But once again, it's speculative. We won't know until the appropriations bill is actually on the table and approved. We're hopeful, let's put it that way.
Right. And on similar, I mean, it's all obviously speculation at this point, but we have heard some U.S. operators say that they're also getting traction behind the scenes regarding 280E, and I even had some say that it probably won't be around, at least with respect to marijuana, in a year or a year and a half. Are you that optimistic on that front, or?
I think we're going to see improvement from a regulatory perspective in respect of the banking industry, in respect of tax policy. Once again, I mean, the industry is growing so fast and creating so much new employment and new investment that sooner or later Congress will catch up with where the industry's at. There's just a lot of congressional support to the industry, and Beth can speak to this. I think she's more closer to it than I am.
Well, yeah, and there's also speculation, and as Scott said, it's really just speculation that potentially Sessions' move is to force the hand of Congress, to actually do something, because his job is to enforce federal law, and Congress makes the federal law. So there is speculation that was for the move, but we can all only speculate until we see something happen.
Excellent. Thank you very much.
And your next question comes from Kingsley Wilson from Crystal Capital. Kingsley, your line's open.
Thanks very much. Hi, guys. How are you doing?
Good morning, London.
Hey, Kingsley.
Morning. Yeah. Actually, it's not snowing in London, so we're okay today. But all is good here. A couple of quick questions. One on the operational side, and I think there were a couple of touch points on this. Beth, you said that the average selling price had risen over the quarter up to sort of over $15 a gram, owing to product mix. That's presumably the derivatives and that very high margin side of the business coming in. Can you just update us as to the split between flour, I'm talking percentage here, flour and sort of the very high margin derivative shatter wax side of the business, and where you see that going? And then secondly, tagged onto the back of that, it's sort of around the brand. Again, Beth, you sort of talked about moving into California with the branded products. I think, if you look to the future of this industry, it's going to be that high margin skew away from flour towards derivatives, which I believe you're very focused on, and you might want to touch a bit about Canada, but also the brand and what's going on in California. And then the second sort of slightly different side of my questioning, more around acquisition multiples, what you're seeing in the market. Are you still seeing substantial opportunities? Clearly, we're executing successfully so far a buy and build and a consolidation strategy. Are you still seeing great opportunities at attractive prices, or are those multiples rising? What's going on the sort of the acquisition side as you see out for the next year?
Sure. Kingsley, I'll start. I have to remember all the questions. I'll start from the beginning. Probably 3-4 years ago, we were seeing 85% flour and 15%, we'll call it other, which would be a mix of, concentrates and edibles. Now, we're seeing less than 50% flour, so it's about 45% flour, about 40% concentrates, and the rest being edibles and accessories. So we really are seeing a mix toward, the concentrate market. And a big part of that is also because, the consumer doesn't look like the burned out, hippie with dreadlocks anymore. The consumer looks like you and me, Kingsley. And it's, the vape pens and the devices now are an easy way of consumption. And then third question, I know, California. So the California market is really interesting, and the statistics are showing that the California market can be bigger than actually the rest of the entire United States, which is pretty staggering. We're working on a deal there now with a production license where they would be a contract manufacturer for us, and we would pay them a price per unit and license the MPX brand. It's a really interesting and high margin deal because pricing for trim, which is what goes into the concentrate, which is the starting material for concentrates for MPX, is much, much lower. I can give you an example. In California, trim is going for between $50 and $100 a pound. And right now in the state of Nevada, we're still seeing pricing, $600-700 a pound. But yet, in California, you're still seeing price per gram at retail at the same that you're seeing it in Nevada and Arizona. And then, so the California market I'm really excited about. And then the final question on acquisitions, Scott, did you want to take that one?
Well, let's just say that we always have a pipeline. We probably get between Beth and I 2 or 3 a week of opportunities that are presented to us. We're going to be very selective as we go ahead. As Beth pointed out, we focus on states where there is restricted licensing. So places like Colorado, Washington, and Oregon tend not to be too high on our target list. California, the regulations are stabilizing a little bit, and as the new regulations come into place, there's a lot of fallout and a lot of reorganization of the industry in that state, so we're going to definitely keep our eyes open there. I think you'll see a trend this year, and I noted this on a couple interviews earlier this month. The trend in the U.S. now is going to be towards group M&A. There are some pretty large groups operating in the United States, quite frankly, some that are larger than us, that are private and are looking for some type of liquidity event. And I think you're going to see, and we hope to be able to participate in some of that, some mergers of these groups to create an even larger organization that can deal on a multi-state basis. So I think you're going to see that trend evolve more and more as the year progresses. So it's a pretty fast-moving and dynamic market.
Okay, thanks very much.
Okay.
Your next question comes from Alan Brockstein from 420 Investor. Alan, your line's open.
Hey, guys. Thanks for taking the call.
Hi, Al.
I just had one quick one. A lot's been covered. And you guys have talked about a lot of expansion. You have a lot of capital. You have access to the line of credit. I'm just curious, Scott, if you think you'll need to raise more capital, or will you continue to do most of these deals in equity? If you can just provide some guidance on use of capital, not only for acquisitions but also for capital projects this year.
Well, as we noted, we haven't had any difficulty in raising capital when we need it. Depending on what kind of expansion or merger opportunities arise this year, we will go back to the market as required. Currently, I think particularly with the HighMed line of credit, we're fully funded for all our current projects. We've completed the acquisitions already in Arizona. I think we've lined up enough capital to build out to build out our initial facility here in Toronto. So we'll go to the market only for acquisitions that are near-term accretive, and only for growth or capacity growth. We have no need to go to the market for operating capital. We're more than confident that we'll be cash flow positive from operations over the next fiscal year.
Excellent. That's all I had. Thanks a lot, Scott.
Okay. Thanks, Al.
And your next question comes from Eddie Delfino from 14 Freight. Eddie, your line's open.
Good morning, all. Thanks for taking the call. I'm a local GTA guy. I love what you guys are doing. Just wondering if you guys are planning on doing anything here in Canada as well.
Well, as we said, we quite frankly, we are paying rent on a facility in Owen Sound, Ontario. We've gone through, we've got power, water, all utilities in place. We've got engineering specifics finalized. Architectural plans are in play, and we hope to start some construction up there sometime during the next quarter. It'll be a limited facility at first until we get a sense of how the market's going to develop here in Canada. I see yesterday that they've further delayed the onset of the recreational market here in Canada, so that gives us a little more time to get up and running. We will focus on processing, I think, and branding much more than trying to compete with Aurora and some of the large cultivation houses. I think there's going to be a fair amount of flower and trim available, both from domestic production and potentially from imports. So our focus will be on developing the MPX brand and bringing it into Canada, and as the government and the regulations allow, expanding the scope of product that is available in the Canadian market. But once again, we hope to be up and operational sometime by the end of the year. It'll depend on how quickly we can get building permits and advance on the construction. But once again, it will be a limited scale operation. We had looked for some acquisitions. Quite frankly, compared to deploying capital in the U.S. and what we can get down there for the same amount of money, acquiring a small operation here in Canada just didn't seem to be the best use of funds from an ROI and a growth perspective. So we will be progressing with our own build-out and proceed with our license application that way. We've had some dialogue back and forth with Health Canada over the past 60 days that is very encouraging, and so we're going to go ahead and start construction.
And your next question comes from Josh Felker from CB1 Capital. Josh, your line's open.
Hey, good morning, guys. Thank you for taking my question.
I'm
just wondering on your development with your RotoGrow technology. I know you were doing some test runs in there in Arizona and getting some decent results. I know there was some color in your report, so I was just wondering if you had any idea of where you're going forward with that relationship.
The whole rotary garden technology is a fascinating one. It's particularly useful where you've got a limited footprint or you've got a limited square footage capacity. So we continue to work with the technology. I think we're going to be using it a little more extensively in Massachusetts. We're looking at introducing it into an expanded facility in Nevada. So I'm very positive on the technology. Once again, we'll have a little more color on that, I think, before the end of next quarter.
All right, thank you.
And your next question comes from Mark Jungworth, private investor. Mark, your line's open.
Hey, everyone. Thanks for taking the question. I really appreciate it.
Sure.
So as far as things as of late in the industry, mergers and acquisitions have been big, expanding cultivation space. You guys have kind of already talked a little bit about that. I'm also wondering if you could go into any more detail as far as any sort of expansion plans you might have. And then also, I'm just kind of curious as to, and I missed about the first 5 or so minutes of the call, so if this was covered, I apologize. But if you could just detail a bit about your strategy moving forward, how you're going to compete with similar companies, similar-sized companies in the industry. You had mentioned that obviously you're a different kind of company. You're not trying to compete with somebody like Aurora, like a Canopy. So if you could just kind of talk about your place in the market, your strategy moving forward in your place in the market. And then also, I'm curious if you have been working with any companies specifically to merge with, or if anybody has approached you as far as acquiring you guys, like a larger producer. Is anybody seeking a buyout, and would you be open to a buyout?
The last question's a bit loaded. I'm not going to go there. But I will tell you that we've had approaches from other groups about potential M&A activity. We're not in a position yet to announce anything publicly because it's all very early stage. I think you're going to see that's a general trend, particularly in the U.S. market, although we've seen obviously some M&A activity here in Canada as well. Our strategy has always been, or certainly has developed over the past year, to focus on higher-end derivative products. So oils, shatter, wax, sauce, all those things that are growing the market so aggressively in the United States. And as Beth pointed out, the product trend is towards non-smokable product. And that's our focus. That's why we changed the name to MPX, because it supports the brand. In the U.S. market, we want to move that brand across the country. We'll do it through acquisition. We'll do it through capacity expansion. And if the right opportunity was to present itself, we'll do it through merger. So all those opportunities are there. And as long as they focus on the higher-end revenue band of derivative products with the MPX brand or other brands that we may acquire, that will be our focus. We have no interest in building out 1 million square feet of flower production either here or anywhere in the United States. I just think that with the capacity of cultivation capacity, particularly in Canada, is going to be very high, and that the margin on growing flower is going to deteriorate. I think we're even seeing that in some markets in the United States, and that's not where we want to invest our capital. Now, in places like Massachusetts, where 70% of the product you sell in your dispensaries has to be produced internally, we're going to be forced to build out cultivation, but that's not where our focus is, nor will it be our focus in Canada. Did I answer all your questions, or did I miss one?
I believe that about covers it. Yeah, I appreciate the answer, and I appreciate the time. Thank you, guys.
Okay, pleasure.
And your last question comes from Thomas Blommet from Rochefort. Thomas, your line's open.
Yes. Hello, everybody, and thank you for the call.
Bonjour, Thomas.
Bonjour, Scott. And sorry if this has been answered already because I missed the first half of the call. It's a technical question on the loss that you incurred related to the options linked to the credit facility. I was wondering if this non-cash loss will be reversed when the options will be exercised.
I got David here. I'll let him answer that question.
Yeah. So, sorry, what's his name? Sorry.
Sorry.
Thomas. Hi. Good morning. No. It actually it's a convertible debt, so it'll actually mark to market every quarter, depending on if they decide to convert the debt. So you'll see adjustments to that going forward in each quarter as we mark to market based on the value of the shares. So it's a non-cash item until it's at this point. So it'll move around every quarter. So. But depending on what happens, we can either pay it off or convert it, but there's an option there to be converted. So.
Okay. Thank you so much. And just last question: do you have a strategy for Europe?
Thomas, obviously we've had discussions, but I don't think they're at any point where we want to disclose much at this point. We are so focused on the massive opportunity in the United States and the lesser opportunity here in Canada that expanding into Europe just isn't very high on our radar at this point. There was a previous question about spreading ourselves too thin, and we think that would certainly be a risk of looking overseas at this point in time. So for the immediate future, and I think Beth will agree, the U.S. is our primary focus, with a small secondary focus here on the Canadian market.
Perfect. Thank you so much.
Okay.
Thank you.
And we do have another question from Kingsley Wilson. He's queued back up. Kingsley, your line's open.
Hi, Kingsley. Hello.
Kingsley Wilson, your line is open.
Sorry, can you hear me? Can you hear me?
Yeah. Fine.
Okay. Sorry. I just wanted to follow up on that question from Thomas about moving into Europe. I completely understand that, but what about Latin America and places like that, where potentially the cost of production is going to be substantially less than even Canada? Are there opportunities to source supply of cheap product from there? And move that around. I know obviously you can't do that in the US given the laws right now, but potentially into Canada. What is there any other sort of thought process about cheap supply from Latin America, or is that a red herring? I read a bit about that in the press at the moment.
Well, I think there's always the potential. Currently, the import-export laws in Canada are pretty rigid, so I'm sure there would be a qualitative measure before that becomes a fact. Obviously, cost of production in Latin America, and quite frankly, we've even had discussions with a group from Lesotho in South Africa. There is a fair amount of overseas competition we see moving into particularly into the cultivation market that will eventually reduce global prices. We're conscious of that. We've had discussions with groups from both regions. The only place you could import at this point domestically would be into Canada. As you said, you can't point into the United States. The market is going to evolve on a global basis very quickly. We keep our eyes on it. We'll participate when and if that opportunity arises.
Thank you.
And there are no further questions at this time. We'll turn the call back over to Mr. Boyce.
Okay, thanks everyone for your participation. We look forward to the update call that we will host after the release of our next quarter and our year-end earnings, or if anything material jumps up in advance. Thanks for listening, and bye-bye.
And this does conclude today's conference call. You may now disconnect.